Hello, everybody. This is Toni Turner, and welcome to the market now as of Friday, February 11th at about 3:30 p.m. Eastern. Well, the market fell sharply this afternoon on the announcement that Russia has massed enough troops near the Ukraine to launch a major invasion, and Washington urged all U.S. citizens to leave the country within 48 hours. A Russian attack could begin any day and would likely start with an air assault, while a rapid advance on Kiev was also possible, White House National Security Advisor Jake Sullivan told a media briefing. And on that less than cheerful note, let's go on to three charts that could give us some insight into the week to come. First of all, we're going to look at a daily chart of the S&P 500 spider, as we always do. And of course, we do this because the S&P 500 spider, or the ETF, the SPY that follows it, closely follows our S&P 500 index. And we do that because this is the benchmark for the U.S. stock market. Now, and so it kind of tells us the mood and manner of the market, and it's really handy to have at our fingertips. The SPY's last all-time closing high took place on January 3rd and it closed, all-time closing high was at $477.85. That's about $47.78 on the S&P 500 itself. Now, when I captured this chart, you can see that the SPY was trading down here at $441.53. Now, we've had a pretty exciting ride here prior to the more than exciting day than we wanted today, that's for sure. After the SPY made its all-time closing high back here on January 3rd, it fell, it kind of wobbled around on the green line, the 50-day moving average, tried to jump back up over it, didn't do too well, and fell down through the black line, the 200-day moving average, down to lows here of about 426. Then the SPY consolidated here along 428, we'll call it, then ran back up through, a couple of weeks ago, back up through the 200-day moving average, moved back toward the green line again, the 50-day moving average, found resistance there, fell back down, walked along the 200-day moving average, and we were saying last week, could this be a higher low right here? Because that would be positive if we could call this down at 430 down here, if we could call that the bottom for right now, that would be nice. And if it could make a higher low up here and then keep moving back up, that would be positive for the market. Instead, it's been walking along the 200-day moving average, moved back up toward the first of this past week, toward the 50-day moving average, but then, of course, has fallen in the last couple of days, and right now, again, is falling on the news of the Russia-Ukraine situation. So again, we're down here now to 441 and change below the 200-day moving average. So if we're looking at resistance here, we're seeing it, since it's below the 200-day, resistance could be at the 200-day moving average itself, right around 444. Then, of course, we can see that back up in here toward the 50-day at 459. That would be more resistance. And then can it make it back up to about 470 or back up to 477, 478 to the highs? Well, with the situation going on right now, it would have to be over quickly and without many people hurt to get it to the SPY to move up. What typically happens in time of war or potential war, and I've seen it over and over in the last 20-some years, is that technically if war is rumbling in the European or Middle East, again, the same things usually happen, starting with the market falling, first of all. However, commodities, especially energy, many times gold, they move higher. Defense stocks like Raytheon, United Technologies, they a lot of times move higher, and bonds move higher. After we get over the initial shock of it, then of course the market moves according to the seriousness of the situation and the appearance of how long it could go on. So there is no way on earth to tell which way the S&P 500 is going to go next week, even though we have a chart to look at here. We know where danger zones are, and in this case, down below 425, down to 420 on the S&P 500 would definitely be a big negative for the market. And however, if it can bounce before it gets down to 430 or 425 or so, if it can bounce and move up, if the seriousness of the situation is softened and taken back, then possibly the market starts up again. So there is no way to know. There is no way to know. So if you do get into more situations more positions next week, depending on what happens in the market, please use firm stops on those positions, and please remember that cash is always a position. Okay, our next chart today we're going to look at, as we usually do, is a daily chart of the Invesco QQQ, symbol QQQ. As you all know, this is the ETF that closely follows our Nasdaq 100 index. It's led by the big momentum stocks like Apple, Amazon, Alphabet, Facebook, and so forth. Now, when I captured this chart today, the QQQ was trading at $348.39. Now, it made its last all-time closing high back here in November at about $403.99. We can call it 404. It never managed to get back up to that all-time closing high again. It certainly tried in December, but fell short. Then after December, as earnings season came in, kept moving along here. Some of the tech stocks were very overbought in eyes of investors and traders. And so the QQQ fell pretty sharply down through the 50-day, the 20-day, all the way through January. It just didn't even stop at the 200-day moving average. It kept on falling down here, down to its lows right around 335 or so. And then it consolidated here at 335 for a little while, kind of the same pattern as the SPY, but certainly in a lower position. Down under its 200-day, then rallied back up over the 200-day to 370, fell back down going into February, jumped back up and could not get back over that 200-day moving average no matter what, couldn't stay above it. And of course, then today it is falling again. So it doesn't look like here, maybe it will, and I certainly hope so, but speaking of higher lows, we'd like to think this is the low right here and that we could go bottom fishing. It looked like that might be possible last week, but I'm not so sure in the coming week that that's going to be a viable option. So the QQQ, again, trading down here right now at 348 and change. We do want to make sure for it to stay positive, it needs to stay definitely above that 335 line. So please, again, if you do get into any long positions or even short ones in the coming week, please mind your protective stops and please be very careful. Okay, our last chart today is one now. I'm only putting this out here if you do want to trade what's going on at all. I'm only putting this out here for those who want to keep an eye on things and hopefully use hard stops with anything you buy. We're right now looking at a daily chart of the iShares U.S. Oil Equipment and Services ETF. The IEZ is the symbol. It has 24 holdings. Top holdings include Schlumberger, Baker Hughes, Halliburton, Helmerich & Payne. It did make, and of course you can't see it on this chart, it made an all-time high in July 2008 at $81.33. And you can't, again, see it here unless you go to a long-term chart. But since it made that high in 2008, at about $81. It bounced around but trended lower, finally fell to all-time lows in April in 2020 to actually to $5 and change. So the price of oil affected it that much. Today, when I captured this chart, the IEZ was trading at $16.48. And this is a big if here because we don't know what's going to happen. If in the coming week the Russia-Ukraine provocation goes forward, and if the IEZ stays above $15, and again, right now it's at $16.48, it came down to about $12 here in August and December, and then started back up and has moved up as oil has moved up in a pretty direct ascent here, walking up the 20-day moving average. So if in the coming week the IEZ remains above $15, and that's right here. I'm keeping this pretty tight. You can loosen it if you want to. If it stays above $15, I may, and the operative word is may, add a small position to my trading account with an initial stop at $14.75. If and when the IEZ rises to close, see this high back here, the end of May? If it rises to close above this prior high at 1750, I will add more shares to my account, and of course by then I will have a trailing stop in place. So if you'd like to keep an eye on the IEZ, please do so in the coming week wisely, and please consider using stops. And now, also, please know this is actually a perfect time to check out my online training programs and make sure you're ready to start trading and make this year your most profitable year. These programs include our flagship training, 7 Steps to Successful Trading, How to Swing Trade Successfully, which is one of our most popular programs, Trade the Trend to Profits, which is a little more hands-off, but certainly a great way to make money. For novices, how to read charts. We have 3 winning setups. And in many cases right now, Bottom Fish Like a Pro is turning out to be a great, great program. These programs can help you increase your gains quickly and easily. To see all of my online training programs, simply go to the link on this screen right up here, or simply click on the orange button below. Until next week, keep green on your screen. I'm Toni Turner, and this is The Market Now.